StockPulse.com episode of Hidden Treasures. This hidden treasure, McEwen Mining, MUX and the NYSE and TSX. Allan Barry of the Allan Barry Reports will be drilling down with Executive Chairman Rob McEwen.
Hello, everyone, and thank you for joining us today. I have a very special guest in Rob McEwen. Rob really is someone who doesn't need an introduction in the mining space. Has been an innovator since his days at founding Gold Corp and the Gold Corp Challenge. Now his namesake McEwen Mining is doing some, has gone through some troubled times, if you will, but I think it's one of the big turnaround stories in the space that investors that want exposure to mining, gold mining, need to pay attention to. And so thank you very much for joining me today, Rob.
It's a pleasure to be on, Allan. Thank you.
Okay, so I listened into your presentation at the, I think it was Beaver Creek. And what really impressed me about that presentation, Rob, was that you were very forthcoming in your the challenges that McEwen Mining had been going through. I often find that lots of people in this business, the mining business, tend to be rah-rah cheerleaders all the time and don't really face reality. So let's start there. Let's sort of look at things that have been challenging you, and then we'll get into where we're going from here on forward.
All right. Well, as you said, this year, 2019, has been a very challenging year for McEwen Mining. And we have put out guidance several times and have failed to deliver that guidance. And the reasons, I'd say there are three reasons, maybe four. We started off back in August of 2018, looking to raise some money to finance the completion of our gold bar mine in Nevada. We looked at our financial forecast and we saw that, well, we had some room to take on some debt. And at the time, we thought our share price was low, and if we could afford the debt and retire it comfortably, we should do that rather than issue more shares. That was in August of 2018. We took on $50 million worth of debt. It was straight debt. It didn't have any warrants attached. We didn't want to issue any shares that way. And of that $50 million, I guess we went around and spoke to about 60 credit providers. And in the end, the debt carried a 9.75% coupon, which seemed low compared to many of the other groups we'd spoken to. I ended up taking 25 of the 50. And we went forward. Within a month, though, the government of Argentina imposed a tax on mineral exports, and we happen to have one of our 4 operations is located in Argentina. Okay. And so suddenly, looking at our forecast between the export tax being imposed on our joint venture down there, and then shortly thereafter, our mine down there is a joint venture. It's run by another firm. They were using 3 different refiners to deal with their mineral concentrates, and one of them went bankrupt, and they were unsecured. So that meant the joint venture was unsecured, and all of a sudden there was $20 million in the joint venture that was taken out of the forecast because it had taxes and wasn't going to occur.
And so, in this gold market, that sort of isn't received nicely.
No. So suddenly we were going to be short $10 million, our share of the joint venture. So we said, our forecasts now it's getting pretty skinny, the margin we had between satisfying the covenants on the debt that we just put on. So we said, we're going to have to raise some money. We registered with the SEC something called an ATM, an at-the-market offering. which was becoming a more popular vehicle. The sales pitch was, well, you're only feeding stock into the market slowly rather than doing a one-off issue. So we registered that, and in December, we started utilizing it with UBS.
Okay.
What we had registered, though, was more than we needed, and I think that alarmed the market somewhat, that thinking we'd be issuing more shares and raising more money than we needed.
Which goes back to the way mining stocks are being treated this year. If you disappoint once and then you give them any kind of sniff of being down on the ground, they tend to want to kick you even more.
Oh, yes. I've felt that a couple of times this year already.
Okay.
So so that's in December. In January, at our Black Fox mine, there were two events that happened. One was they had difficulty getting into one working area at the beginning of the month, and then at the end of the month, we come to a situation I call our Darwin Award. I don't know if you're familiar with the Darwin Awards.
Oh, yes, I use that term quite often.
So for your listeners, it's just people who do foolish things and usually shouldn't be in the gene pool of the human race. So at the end of January, at our Timmins operation in northern Canada, the temperature was minus 40.
Wow.
And when we bought this mine 2 years ago, it came with some contractors who provided services to us. One was when we brought the ore up from underground, we would put it on the surface, and then a contractor would crush the ore, then put it in a truck and deliver it to our process plant or mill that is located about 25 miles away.
Okay.
Well, his crusher was a 3-story affair, 3 different levels of conveyor belts, and it was not enclosed in a building, so it's open to the elements.
Oh my gosh, minus 40
Minus
can
40.
cause some issues.
So the conveyor belts were rather stiff and not operating as well. So the contractors' employees, and I underline contractors' employees, not McEwen employees, decided the way to help the conveyor belt perform better was to put a blowtorch underneath the lowest one and heat it up and make the rubber more pliable.
Okay.
So
I can see where this is going.
it seems to work a little bit better, and the 3 operators working the crusher decided to go to have dinner and left the crusher unattended.
Oh no.
The conveyor belt caught fire, and then rubber is very combustible, burns at a very high temperature, and the flames reached up and enveloped the next level of conveyor, and then that reached up again and did.
Oh no.
Third. It destroyed the crusher, fried all the electronics, started melting the frame. So we were 7 weeks without any income, and 7 weeks where we could not crush any ore and deliver it to our process plant.
Okay. Oh man.
So you have a little more than 200 people there, and they're each earning close to $100,000 average, but no revenue.
Oh.
So remember,
that's going to affect the bottom line?
Yes. So that financial forecast I said that was looking tight. We
got a little tighter.
It got quite a bit tighter. Then somewhere in the spring, there'd been a very heavy snowfall this past winter up there, and there was large runoff, and a number of mines in northern Ontario, Canada, were seeing inflows of water that were interrupting production. At our mine, one side of the mine got flooded when a miner drilled into an area that was like pulling the plug out of the bottom of a bathtub.
Okay.
And there were 3 months where the west side of the mine was rendered inoperable because it was flooded.
Okay, and how much of a percentage of the overall operation does that affect?
That would have been half of the production to come to mine at that.
Okay.
So you're getting a sense that our cash flows are getting tight.
Very tight, yes.
And so at the end of March, we did a raise at a level I didn't like to raise, but we needed the money because we had debt covenants that required us to have a certain amount of working capital at the end of each quarter. And if we were below that, we would be in default of the covenant, in breach of the covenant.
And then they get their money.
Well,
then they want their money.
Well, then they want more money because the interest rate I mentioned was 9 3/4. If we had breached the covenant, it would have gone to 15%.
Ouch.
And we would have declared a default.
Which means you got to pay it all back right away, doesn't it?
Right. So we scrambled, did a financing at the end of March. Now, so that's black box.
Okay.
So we have Argentina imposes tax, and black
box. You got contractors burning up material stuff and water flooding you.
Then we have at our gold bar mine, which is in Nevada, we chose to build through the winter, and it was to have started production at the end of the first quarter, but it didn't start at the end of the first quarter. It started at the end of May, and it was a slow start rather than the fast start that we projected.
Okay.
So again, we're not getting the revenue that we were when we thought we'd get it. So the flood and the fire, they're not going to happen again. They were one-offs.
Are you getting rid of the contractor, or how does that?
He was promptly dispensed with, and so there's no contractor. The crusher that had been used, we said we're going to put a crusher over at our process plant and just put the ore up from surface, put it in a truck, drive it over to the mill.
And you're not going to heat up the conveyor belt and then go for lunch.
No.
Okay, good.
So, I can laugh at it now, but it's.
It probably wasn't a laughing matter when it was in the midst of happening.
It was unbelievable.
Oh man, I can imagine.
So that's where we are. Our other two operations. Other than the tax.
Okay, before we go on, now down in Nevada, even though you started slower, how is that turning? Has that been a better scenario than some of these other hurdles?
It's coming along. It's still slower than we'd like to see it, but there were some operating issues that are now behind us. There's still some in front of us, but the big ones are behind us right now.
Okay, so it's kind of a comedy of errors that isn't too funny when you're sitting on top of the error machine.
No, I mean, I get $1 a year, and I have $160 million invested in the company, my cost base, not my market value, my cost base. Right now, I think I'm below market value. But
I think that's something people might want to be aware of, that the current price is less than what you've paid for your entire position.
Yes.
Okay. Well, it's if the investors can get in at a cheaper price than you, that can be a very nice scenario.
Yes. Well,
for them, not so much for you.
Well, when I built Gold Corp, I was the largest individual shareholder, non-institutional. And after I left Gold Corp, and I thought, well, how would I like to do it? I'd like to do it a little bit differently. I'd like to be much closer to my shareholders. And that's why I chose to take a very small salary. In fact, I think I got a salary increase 4 years ago. Went from being paid nothing to
$1.
It's almost an infinite increase.
You know, Rob, after dealing with all those things, I think you can give yourself 100% raise.
Thank you, Alan.
Okay. Now we've dealt with all I think that's all the problems that could have arisen during this sort of a challenging period for the gold stocks. Was there any other problems you faced?
Well, again, with these delays in our operations, there was a significant shortfall in our projected revenues. And again, when was it? About a month ago, we were compelled to do another issue.
Okay.
So
I saw that one, $50 million that you did in like 2 days.
Yeah, we did. The one in March was 25, and the one in recent was 50 million. So
and it was announced and closed in 2 days. That was pretty rapid. So I guess there is some people that still like the turnaround story.
Yes, that's right. So
okay,
we have enough money to run next year and hopefully more.
Now, was some of that money going towards fixing some of the problems, Rob?
It was more, we had the money to address the problems that occurred. That's been addressed. It was more for development money at Black Fox, which is up in Timmins. I should really help your listeners. We have 4 operations. One's called Black Fox, it's in Canada. One's called Gold Bar, it's in Nevada. One's called El Gallo, it's in Mexico. And San Jose in Argentina. And so
now, and the mix is a little different on the metals, correct? Maybe you could tie that in as well.
Yes. In Canada, it's gold. In Nevada, it's gold. In Mexico, it's currently gold, but there is a silver
kicker
that we have there. And in Argentina, it's gold and silver. It's very high-grade gold and silver, or high-grade silver and gold.
Okay, so you've got the real gold and the poor man's gold covered, and you also have exposure to green gold as well.
That's right. We have a very large copper deposit, which is located in Argentina as well. Between the indicated and inferred, if you look at, there's up to 30 billion, just under 30 billion pounds of copper. It's a large CapEx project, which we've been looking for a partner to joint venture with that has
deep
pockets and skills to bring a large project on. It's modeled to produce 415 million pounds of copper a year for the first 13 years and run for 36 years.
Well, you know, there sure is. One of the reasons that I've always been very bullish on gold and silver and copper, for that matter, is I've been in this business since 1993, and practically most of my career I've seen a underinvestment in exploration, new mine development that keeps up with what they're depleting every year. And so with all this demand coming for copper to wire up the future of electronic vehicles and all other methods of getting energy out there, I think that we need more copper mines out there, and there just aren't enough of them.
Yes. Well, this property, it's in the Andes, northern Argentina, right up against the border with Chile. And it's blessed with a large glacial valley where you could put an airstrip in, a big one.
Yeah.
And we'll be working next year, part of the money we raised, we'll be working on a alternative route into the property that will give us 12-month access. Current access is restricted to about 5 months a year because of 2 high mountain passes we have to go over. So
if you have a year-round access, that probably affects the Well, the operating and your capex, wouldn't it?
Yes, and the
Okay.
attractiveness, which would in turn make it more attractive to a joint venture partner.
Gotcha. Good. Okay. So we've kind of dealt with all the challenges and why McEwen Mining is a good turnaround candidate. Why don't we talk now about what's going to sort of what you hope to lead you out of that and make it into a successful pick for someone who likes turnaround stories in the mining space?
Certainly. Well, during this challenging year, two of our operations, Mexico and Argentina, were performing as planned, at least from a production standpoint and a cost standpoint. We were also spending a lot on exploration. Our principal focuses were in Canada, around our operations there, and also in Nevada. And yesterday we had a webinar that you said you listened to, and
actually, I didn't listen to that one. I listened to your presentation at Beaver Creek.
Right. Oh, well, yeah. I'll send you the link for the.
Definitely do, and also for our listeners, they should. As we're talking, have your corporate presentation up. Well, while people can download it at your website.
Terrific. Well, our webinar will be up on. If it's not up on our website right now, it will be shortly. And we had our head of exploration, our district manager for exploration, and one of our senior geologists speaking about the exploration we've been doing in and around our properties in Timmins, Ontario, Canada.
And I'm actually looking at one of the slides that stood out to me was you have a slide there. I think it's what number here? I don't have the number, but anyways, it's got the comparison of Red Lake, Timmins, Kirkland Lake, and Black Fox. And that's, I mean, you know, if it's looking like Red Lake, you had to get down to about 1,000 meters at Red Lake before the really juicy stuff started, and you're not even there yet.
No, we're not even half the distance that Red Lake went to, or Kirkland Lake goes to, and some of the mines in Timmins. So we bought this property, what we call the Black Fox Complex, and it consisted of two properties: the Black Fox mine property and the Stock property, where the process plant or mill is located. The previous owners had purchased it in 2014 and paid $560 million put into it, and we bought it for $35 million.
Oh.
So we thought we've got a pretty good deal. We picked up two large pieces of real estate on a very prolific gold belt that's been has gold mines all along it and has been producing gold for more than 100 years. So our properties came with 1.25 million ounces of gold, a process plant with excess capacity, a mine that had short life, but was producing at the time 50,000 ounces a year.
With wide open exploration.
With wide open exploration. And it also came with $180 million of tax loss carry forwards, meaning we could apply these tax losses against future income and reduce any taxes for quite a while.
Gotcha.
So then we bought it in October of 2017. We started exploring in 18, and
Was that the feeling, Rob, that the exploration was really the key to opening this thing wide up?
Yes.
Okay.
Yes. So, and the webinar was all about, we put out 11 press releases this year on our exploration results, assay values coming up.
Some of them are in your recent highlights of your news releases. 44 meters at 9 grams. Got 25 meters of a quarter ounce. Lots of good juicy stuff there.
There's some really, really good stuff. And a recent discovery, it was on our Stock property. It's called Stock West, but we just drilled it, started drilling there in April, and it's shaping up very quickly. Big intercepts like.
Now, is that sort of in between the two, Rob? Am I getting that right, or is it?
Let me. The Black Fox mine is where we have the mine, and it's a long property. It would be about 4 miles long.
It's got the head frame.
It had, yeah. Well,
Okay. On your presentation, it has a head frame on it, or?
That would be where the mill is. There used to be
okay.
there as well. That's
okay.
Yes. So the stock property where the head frame is in the picture. Stock West is on to the west of it.
The west of that. Oh, okay. So not in between Black Fox and Stock. Okay, gotcha.
And so the Black Fox property is about 4.5 miles long, and the Gray Fox property is about 3 or 4 miles long. Again,
okay.
And so. And on that chart you were referring to, you saw Stock and Black Fox.
Black Fox, yes.
Stock has only been mined to a depth of 330 meters, or about 1,000 feet.
And in these kind of systems, you're virtually still way above where you want to be.
And we've drilled down to about just over 3,000 feet there, so about 1,800 feet below the deepest workings. And you were getting grades of 27 grams over 7 meters, 6 grams over. No, sorry, Stock West. Our first hole was 6 grams over 39 meters.
Oh wow! Okay, so it's not just some tiny little vein.
No. It's we're blessed with a number of different rock units where we're finding deposits on these properties, and that's what's got us very excited. That there are multiple. Periods of mineralization and settings. So,
okay.
So we have.
Okay. I'm on the page where it's got the Stock West, the Stock Mine, and the Stock East. So East is what's in between Black Fox and Stock. I think.
Well, what you're looking at there, Stock is just one property with a west, a mine, and an east component to it.
Okay, gotcha.
And then so in this presentation we go the Stock property and talk about the 3 parts to it. Stock West, where the Stock mine is, we call that Stock Deep, and then Stock East.
Okay.
Then you go to the Black Fox property, and at the south end of it is something called Gray Fox, and it has 4 or 5 different zones, and they're all within 1.5 miles circumference.
I'm noticing here on this chart with some of the grades that as you get deeper, you're getting that pleasant surprise of some 120 gram gold over 1.6 meters, an ounce over a meter, that sort of stuff at the Stock mine.
Yes.
Okay, so it is sort of zonation of grade. As you get deeper, you get into the juicier stuff.
At the moment, yes.
It's a nice trend.
But we're still, exploring, and that's why we've been. The first pass in 2018 was, let's test where there were zones defined before, and let's see if there are other targets on this large property that's relatively underexplored. And we found a number of targets that looked interesting. We started drilling them this year, and they're proving to be quite exciting.
Getting some nice, pleasant surprises there, isn't it? That's a nice trend. Rob, as you mentioned, you guys did that webinar yesterday, and instead of you going over all these numbers, it sounds like your geos did a pretty good job, and maybe we should just recommend people go check out your website and check out that webinar from yesterday to really get into the guts of this exploration that you guys are going to do.
Yes. The purpose was we put out all these press releases through the year. What does it mean?
Exactly.
And what we're working towards is, if you can think of a hub and spoke, like think of a wheel and the hub and the spokes, that we have a process plant or mill, as it's called in mining,
Yeah.
that has excess capacity. We are in a well-established mining district that's been going for over 100 years. So you have highways, you have power, you have equipment suppliers, you have labor forces. It's not like you're building in a remote area of the world, and it's relatively stable politically. So
Yep.
We look at that.
And high grade.
And high grade. Well, that helps.
It's, one of the things that I always paid attention to when you were running Goldcorp was the low cost and high margin material. And that made Goldcorp one of the lowest cost producers during your tenure. It sounds like this is much similar to that.
It has a lot of similarities. When I was building Goldcorp, I bought what is now called the Red Lake mine, and it had been going since the late 40s. It was high cost at the time. It had
underexplored.
Underexplored. Short
infrastructure.
Had a difficult labor history, and I thought, well, right next door was a very rich mine. And they'd put in over $100 million while very little money had been put into the mine that I was buying. And so we said, well, let's put some money into exploration. That's when we started finding some very pleasant surprises at depth that propelled Goldcorp. I mean, we went from producing 50,000 ounces a year to producing at $360 cost per ounce back then. To 500,000 ounces at $60 cost per ounce.
Wow. And then gold participated as well, finally, after a long period of time, because you got into the early days of the 2001 to 2011 bull market in gold.
Correct. Yeah.
So that's a heck of a combination. You got your costs down and your margins up and growing.
So what we're looking at here is we have a number of deposits that, think of them as satellites, potential future sources of production. We have a mill that can accommodate increased volume of material or tonnage going through it, and we're getting very good results on our exploration. So we're in an early stage right now of saying, well, Black Fox has some issues as a mine. It has a short life. It'd be really good to take the pressure off, because right now the geologists are in there. As soon as they find something, the miners want to take it out. So,
gotcha. Okay.
Going back to the Goldcorp model at Red Lake, we had a labor strike, and during it, we didn't produce any gold. And that strike lasted for 46 months.
Holy moly.
We had the United Steelworkers as a union there. And so I said, well, during this strike, we're just going to push exploration as hard as we can, because I said to the geologists, this is a very rare moment in your life when you're in a mine and you don't have to compete for resources, machinery and space and air and water with the production crews. So I would go in there and just drill as much as you can. We were on strike for a long time because each time we went back to the table, I kept offering less money than before.
Well, you didn't like my last offer. How about this one?
So anyhow, it went, that strike lasted 46 months. At the end of the time, the United Steelworkers said they will no longer be at the mine and walked away. First time in North American history.
Oh, wow. And in the meantime, how did the boys do with the drilling?
They kept finding more.
Okay.
And that's where I look at Black Fox and say, we should slow down our production, give ourselves some margin to let the geologists go in and explore to the west side of the mine where we've have some very good grades. And at the back of this webinar, it talks a bit about what we're doing there, or their pictures showing the grades. I mean, the grades have been as high as 1,175 grams over short intervals. So there's something out there, whether it's not, I have to say to your audience, it's not, Black Fox does not have homogeneous dissemination of gold. It's nuggety. So,
just like Red Lake.
Yes, there were parts of Red Lake where you had good intervals, but it just makes it's a little more expensive mining, and you have to be very selective the way you mine to ensure you're not taking out too much rock that doesn't have gold.
Yeah, but Rob, if I was going to ask somebody to be in charge of something like that, who's dealt with something like that, you have tons of experience at that. So it's not like you're going into a situation like that with someone who's not had that extensive experience dealing with those issues.
Well, sometimes you have to get the miners to think the same way.
Okay. I have a feeling you might be fairly good at convincing people.
Oh, okay.
Okay.
We are currently at about 2,000 feet away from the Black Fox mine is a deposit that we are currently driving a ramp to. We just created the opening at the bottom of a pit, and this will take us about a year and a half to get out there and put all the development in to mine it. And when it starts in third quarter of 21, we will be able to slow the production down at Black Fox considerably, because it's a different type of ore body. It's more broadly disseminated gold values. We're mining from the bottom up, so you have gravity working for you. And it should be much more economical ore, and it will buy us time to further explore the Black Fox mine. At the same time, we're looking at scenarios, whether it be going underground at what we call Gray Fox, which we haven't spoken about yet, but it's at the bottom of the Black Fox mine property.
And you've been very generous with your time, Rob. I don't want to encroach on your time, but I love talking about this stuff. So I'm not going to put any halts on you. If you want to talk about it, go ahead.
All right. So, well, just trying to give you this picture of there are these different deposits on our property, and that we're at the preliminary stage of looking at Black Fox and saying, do we go at it by way of an underground development or an open pit? And Black Fox or Gray Fox, there are too many foxes here.
Yeah.
But Fox has 5 zones around it. The area we call Gray Fox has composed of 5 zones that are all within fairly close proximity to each other. And some of the grades coming out of there are quite impressive. So that's just under 600,000 ounces currently at 7 grams. And we will have in the first quarter of next year a resource update there. And that was one of the biggest areas that, or concentration of our drilling this past year. So,
okay.
And then over at Stock, there's Stock East, Stock West, and we benefit there from the Stock mine. It operated last 15 years ago, so closed 15 years ago. It's a shallow mine, but it has underground development that is in close proximity to Stock West, less than 1,000 feet away from it, and about 2,000 feet away from Stock East. So the mine is considered by the Ministry of Mines as a mine that's temporarily suspended.
And it's still, I got to highlight again, compared to those other, the Kirkland Lakes, the Timmins, the Red Lakes, you guys haven't even got down to the juicy parts of the system yet.
Not yet, no.
Wow.
So there's development scenarios for both of these properties, Grey Fox and Stock, they'll gain more substance as we go along through next year.
Okay. So you're going to be cranking away with the exploration all around in that the Black Fox, the Grey Fox, the Stock, a lot of exploration is coming forward.
Yes. Yes.
So you're kind of a hybrid of a producer and an exploration story.
Yes. Yes.
Got
And it's been the issues the challenges of this year from an operational standpoint that have really obscured our
exploration.
Yes. And people have just focused on it, and I can understand why. I mean,
the exploration is sort of the key to unlocking a lot of your future.
Yes, Alan. Precisely.
Okay, I got it. And really turning what was a cheap acquisition into something that potentially could be a key to your future.
Yes. Yes.
Got it. Now, maybe could we just quickly brush over Nevada and Mexico, and then I would be remiss, Rob, you're one of the great evangelists of gold, and I got to get some comments on your gold outlook. So let's just quickly go over those two as well, if you could.
All right. Our Nevada property is called Gold Bar. It's located in northeastern Nevada. It's on the Battle Mountain Cortez Trend. It's located 25 miles south of Barrick's largest gold mine in the world. There are Cortez Hills, and their two largest discoveries, recent discoveries, 4 Mile and Gold Rush.
And so, that 4 Mile is pretty exciting, if my memory serves me.
They are very rich, big zones. They're talking better than 10 million ounces. And the Cortez complex, Cortez pipeline, that is over 50 million ounces that have been outlined there. So
you guys are on strike of that.
Yes, we're on the same trend, the Cortez trend, 25 miles to the south. There's a mine below us. Well, there used to be a mine.
And that's a big fault going right through you guys, right up to 4 Mile and the Cortez stuff. And let me guess, that fault is important to the gold mineralization.
It's that fault, and then there are cross-cutting structures that people look for.
To crack things open.
And an intrusive, something that's rising up from underground that's creating pressure and flow fluids. So we have an intrusive nearby. We have cross-cutting structures. We're on the main fault. On surface, between what we've discovered, and we're mining an area that I'll call brownfields. It was mined in the 80s.
Okay.
So between what they've mined and what we have, it's about 1.6 million ounces right now.
Okay.
So we have a 7.5-year life currently modeled. When we did the feasibility study, we've drilled around the areas. There are 3 areas we're going to be mining. We've added to that. In addition, there's a property we bought in 2015 that adjoins our property. It's 5 miles away from our heap leach pad.
That's to the south, right?
Yes, it's called Gold Bar South, and we'll have a resource update on it out again in the first quarter of next year, and that should extend the life. We're seeing some interesting grades there appearing at one end of it. They're getting better grades over longer intervals. The mine grade we've modeled is 1 gram, and we're seeing grades higher than that on Gold Bar.
So now that's the near surface oxides that you're producing from, and I bet there's some good potential at depth as well.
Yes, we've done 2 holes so far. We've hit the horizons the geologists modeled that are the host horizons for what they're seeing up that Barrick's encountered. They found, I think they call it a geological success.
Okay.
They found the minerals normally associated with gold.
You know, and Rob, I spend a lot of time in exploration and following exploration, and sometimes this market can be, and people in this business can be really dismissive of geological successes, but you got to have those geological successes to lead you to where you can have the big success.
Yes. Well, the
Okay.
positive is we hit the right rocks.
Yep.
The negative was in those holes we didn't hit any gold, but it helps us better fine-tune our drilling and test some of the other spots along there where we do believe it's conducive to having a setting similar to Barrick.
Ooh.
We have a large land package, but we've added to, and
So this is another one that it sounds like the drill bit is the key to unlocking the potential here as well.
Yes.
Okay.
Yeah.
Good.
If we were fortunate enough to hit something like a hole like they hit at 4 Mile or Gold Rush, it'd be a fun story.
Well, and it sounds like that's realistic potential. I'm not going to say, 50 million ounces is real. That's what you're looking at. But if you got the right rocks in the right jurisdiction with the right faults and the right structural story, that's where you want to be looking for another one.
Absolutely.
Okay.
So
that's Nevada.
In Mexico, El Gallo, or El Gallo, some people pronounce it.
Gallo, LL is like Fresnillo.
Yeah.
I'm learning a little Spanish because I actually live in Mexico.
Oh, you do?
I moved from Vancouver a few years ago. I actually run my own exploration company from down here, and I wanted to be close because the geology is so phenomenal down here, and I find it still underexplored, but your costs are so low for exploration and development that, I thought I could spend a good chunk of the rest of my career down here. So I moved to Zacatecas, Mexico a few years ago.
Huh. Well, that's good. You're probably enjoying warmer weather than we have here in Toronto right now.
I definitely am.
So El Gallo started its life as an underground mine. Then it became an open pit mine. Queen Stake started it. Then there was another company called Nevada Pacific that owned it. We bought Nevada Pacific. We explored, put it into production as a heap leach. And we stopped mining in the pit last May. And right now we're doing residual leaching of the heaps.
Okay.
While we were mining, we also did quite a bit of exploration in the area, and we discovered a silver deposit located 5 miles away from the gold mine.
Now, is this a vein system?
Yes.
Okay.
So we had a feasibility study on it. We got it approved by the Mexican government to construct and operate back in 2015. But as you know, the silver price was low and capital was very hard to come by. So, and the capex seemed higher than we wanted to spend. So we didn't build. Confident that the metal price was coming back and that the silver's not going to go away once we found it. So we worked on the economics, reduced the capex. We'll have a feasibility study out in the first half of next year. But we have received all the approvals from the Mexican government to construct and operate it. And it would be a 10-year life as we currently see it.
And low cost, I bet.
Yes. But it wouldn't be a large mine. It'd be in the neighborhood of 30,000, 40,000 ounces a year. Gold for the first 6 years, silver for the next 4 years, as currently modeled. We have considered selling it just to focus our attention, concentrate our attention on Nevada and Timmins.
Got it.
But we haven't, I guess we haven't pushed that hard yet.
And have you sort of drilled it all off at depth and along strike, or is it still open?
It still has room to grow, and
Okay.
it would be satellite deposits as well.
So there's more. You've got a cluster there of
Yes,
epithermal veins.
yes. So
Yes,
that's
and
Mexico.
then there's still regional exploration, so there could be more
Oh
as
yeah.
well.
Oh, we have a very large land package down there. It's
Oh,
in
okay.
Sinaloa State.
And good infrastructure, roads and stuff.
The road's around. Yes.
Good. Okay.
Yeah. I mean, it's been going for a while.
So the main drivers of a turnaround, it sounds like, would be Nevada and Timmins.
Yes. Yes. They have
And
the.
of course, if copper takes off,
Well, then
you've
that's a
got.
different story altogether.
I got it. Yeah, yeah, yeah. Wow.
We,
So I think we've dealt pretty thoroughly with the key sort of keys to turning McEwen around. Rob, you've been so generous with your time. But I got to ask you. Let's close it on a chat about gold, and we'll definitely come back around later, and we'll do another one of these hidden treasures because, turnaround stories take a little time and a little understanding. So we'll keep pounding on the story, but let's talk a little bit about gold. I'm a big bull on it. You've got no QE going through the roof again. It looks like they'll be back up to levels they were before. You've got negative rates on probably $20 trillion of debt now. You got debt going through the roof. It seems like a perfect storm for gold to go a lot higher.
I would agree. And you're also seeing central banks buying, and not just one or two, but a number of them are coming in, and they appear to be trading their dollars for gold.
It's like they want to harden their currencies.
They want to harden their currency. Certainly, China and Russia are in that camp that they'd like to share some of the limelight as being accepted as a reserve currency of the world, maybe displace the U.S. a bit, U.S. dollar. But
wow, if that happens, we could see a real run.
Yes, yes. I mean, that's a while away. I mean, the Chinese currency is now viewed as a reserve, one of the reserve currencies by the IMF. So, if you start transacting trade not in dollars but in your own currency, you start changing the value of the dollar.
Yes.
A lot of the world's trade is conducted still in dollars.
And so it's benefits from that, which, is kind of a negative for the price of gold. But it's something like that. I mean, with the fundamentals, it just can't stay up there forever.
Gold's going up in almost every currency in the world. And I believe will continue to do that. As you said, the quantitative easing, the high levels of debt, the fact that there's over $17 trillion of sovereign debt that carries a negative yield.
I've been saying, I've written a couple things recently that in a yield-starved world, gold will be king.
Yes, yes.
And we got 20 trillion of it so far. Like, that's got to be 10% of the world's debt almost. 10%, something like that, I think. Is now negative yielding, and it looks like everybody wants to join the party.
Yeah. So it's a perfect storm. You have some very high-profile investors, very successful investors, that have been advocating since last summer for people to get exposure. If you're a student of history and you take a look, this is one of the longest bull markets we've seen since the beginning of the 1900s. We know there are business cycles. They haven't gone away despite.
Yeah, they haven't socialized them?
No.
They seem to be trying awful hard to socialize them, but that comes at a cost, and it's in all of these things we just talked about.
Yes, yes.
So, you know what this reminds me of, Rob? It reminds me a lot of where we were prior to the 2001 bull market for gold starting.
Yes, yes, it does. It does.
Well, I think if you put together all the things that McEwen is doing, McEwen Mining is doing to turn this story around, and we get a little bit of a wind behind our backs with a stronger gold price, which I think the trends are setting up nicely for us. So I think we should leave it on that, Rob, and say, McEwen Mining is a turnaround story that people definitely should be paying attention to.
Very good, Alan. I would agree with that sentiment.
I thought you might, Rob. So I'm going to close it off by saying, as always, my shows are for information purposes only. It's important for you to do your homework, speak with your financial advisors. I would invite you to go to McEwenMining.com. Check out the stock chart, check out their corporate presentations, and definitely check out that conference they did yesterday. And on that note, Rob, thank you very much for your generous time here. You've been very nice to spend it with our audience, and I think we'll get a lot of views off of this.
Very good. Thanks, Alan, for your interest.
And we'll be keeping in touch because I think there's going to be more to talk about soon.
Yes, there will be.